Time for some fun and games. Joining us now for Top That Trade, Phil Flynn, a Fox Business Network contributor, and Alan Nuckman, the market strategist at St. Paul Research. Good to see you guys. Round number one, flag waving finish or start. Goldman Sachs has given up on short dollar recommendations. Is that bullish or bearish?
Well, the dollar right now is 10% off its highs from last year, and it's not even at the halfway point of that drop from the top. So I'm not ready to give up on the dollar yet. I still think there's a lot of pressure there, but you don't want to doubt Goldman Sachs. Sometimes people fade Goldman, but if you look at it as a stock, it rallied from 200 to 350 in just 4 months, and now it's been stuck between 325 and 350. So it's got a target of 375, and it's only up 25% in the last 3 years, whereas the S&P is up 50%. So I think Goldman Sachs stock has a lot more room to the upside than the dollar does.
Well, I think you're probably right there, Alan. But I'll tell you this, I can understand why, Goldman Sachs want to be short the dollar. I mean, because we're printing so many of them. Are we not? I mean, you look at the record amount of stimulus, the ultra low interest rates by the Federal Reserve, you think at some point there's going to be weakness for the dollar.
But why are they quitting? They're quitting.
They're quitting, but you know what? I'll tell you, misery loves company, right? Everybody else in the world is pretty money too. So I guess the dollar looks better by default.
Round number two, milk mania. Starbucks is running out of oat milk. What's the better buy, oats, coffee, or Starbucks stock?
Well, I think right now, I actually think it's oats. But did you ever try to milk an oat? I mean, it's very difficult. That's the problem. You get, try to squeeze that thing to get the milk out of there, and that's it. But you know what? I think what we're seeing is an explosive move coming in the grain market. It's already exploded a little bit. I think we're in a super cycle in grains. I think for years and years and years, we got complacent with bumper crops. Low prices, relatively speaking, has kept demand growing and growing around the globe. And I think we could be short this year. There's no room for error, even in the oat market. So if you like an oat drink, maybe flip to some real stuff, like cream. It's really good. It's really good.
All right, let's talk oats. I worked on the grain floor as a runner way, way, way back in the day. Oat pit, not much action there. There's still not a whole lot of volume, and there's not even, I've never even seen an oat option trade, and I'm an options trader. But looking at it, it's rallied from $2 to $3. That target's $4. We're almost there. 550 was the high back in 2011 or something. So we still have some more upside, but oats are hard to trade. I like coffee better. Coffee's stuck in a range between $1 and $1.50 for 4 years. That target's $2. And let's remember, it was up at $3 in 2011. So I think there's more upside in coffee. And Starbucks, that stock has doubled in a year. So it's already up and gone.
Well,
Hot coffee.
Doe's eat oats and whatever. But I'll tell you this: if you don't,
Mears eat oats.
You flip the corner beans. The entire ad complex looks very bullish.
Round number three, fall fortunes. The VIX is solidly under 20. What does that mean for low volatility stocks now?
Oh, can people just relax? The volatility index has fallen 80% from its highs of last year. But you know what? It doesn't feel that way if you talk to the average trader right now. They're still very, very hyped up about these markets. But low volatility is very positive for slow-moving stocks because it's got reduced risk for now. Let's remember that the VIX was down at 10 in 2018. So there's still more downside, and that'd be more upside in the S&P.
Complacency sometimes is a dangerous thing, right? And if you see the VIX get very quiet, sometimes that's a forewarning that something big's going to happen. I mean, you look at one of the things that does concern me when you look at that, you see the stock market making record high after record high, and everybody's like, hey, nothing to see here.
Tech's not dead yet. I'm going to say that. Tech's not dead yet.
No, I'm not saying the tech is dead by a long shot, but that doesn't mean you couldn't get a wicked correction here. And sometimes when nobody expects it, when your volatility is low. So if you see the VIX go down even more, I'd be more wary that we could see a little bit of a correction coming in this market.
Here's your bonus round question for today. The global chip shortage is causing all kinds of problems, but there's another shortage going on that is distressing restaurant owners. What is that shortage?
Oh, I know one. Avocados. There's an avocado shortage. There is one. I'm telling you.
Okay, that's not it. That's not it.
Though? Okay. What is it?
Chicken wings.
Chicken wings. Okay. Yeah, I can see that.
Chicken wings have doubled in price.
Good answers, guys. But this week, the issue is the ketchup package shortage because we're doing so much takeout.
What? What do you mean ketchup package? It's the package that you put the ketchup in.
I got a drawer over here that's full of them.
Exactly.
Is it worth money? Is it worth money?
Go there,
Where do you sell my? I want to sell my ketchup packets.
Alan, only you would think of that idea, and it's actually a great one. Business First AM will be right